What's going on, everybody? In today's video, I'm going to look at Workhorse's earnings. They just reported earnings here today. As of this upload, we're going to look over it. We're also going to look over the chart. Hopefully you guys enjoyed that intro clip. I'll leave you a link down below to Workhorse's YouTube page. Definitely worth a subscribe. And if you like these videos, consider subscribing to my channel. And also, if you're looking for a new exchange, whether it's stocks or crypto, check out the links down below. And let's take a look at what Workhorse just reported for earnings. Now, I will leave you their press release down below, as well as their YouTube page, as well as a link to their actual earnings call. I still have to listen to it, but definitely make sure you listen to their earnings call. There's always a lot of very valuable information in there, especially in the Q&A. But let's take a look at what they just reported here. Starting with the CEO. Following our stabilize, fix, and grow turnaround framework, we have rebuilt Workhorse's foundation and are executing on our product portfolio roadmap, including moving forward with production and deliveries. In the first quarter, we continued to advance our commercial vehicle programs. The W4CC is now in regular production. We completed the W750 pilot builds and expect to start production during Q2 of 2023. So in the quarter we're currently in, we are on track to meet our annual sales targets based on firm and forecasted customer orders. And the CEO continues by saying we also remain on schedule to begin production of the all-new W56 step van and strip chassis units in the third quarter, so the upcoming quarter from here. We are encouraged by customer feedback we received at recent industry conferences where we unveiled the W56, held test drive sessions, and displayed a services upfitted version of the W4CC. Additionally, our aerospace business continues to hold flight demonstrations with prospective government and commercial customers. Looking ahead, our focus remains on executing our growth strategy of delivering quality products to our customers. We're making steady progress in expanding our CV dealer network and plan to onboard 8 to 10 new dealers in 2023. Although we recognize there's still significant work ahead of us, we are confident that the actions we are taking today will establish a platform to drive growth and create value for our shareholders, customers, and communities. Now let's take a look at some of these highlights. Ramped up production of its W4CC in its transformed Union City, Indiana plant. The company is currently producing 16 units per week and plans to ramp up to 25 per week by quarter 3. The company expects to begin production of the W750 in quarter 2 of 2023, as I said a second ago. Successfully unveiled the W56 production intent vehicle at the NTEA Work Truck Show in Indianapolis in March, and featured a fully subscribed ride and drive session at the Advanced Clean Transportation Expo in Anaheim, California in May. Now looking at Tropos, they delivered 18 Tropos vehicles in Q1 of 23, which were assembled in Workhorse's Union City plant. Volumes for final assembly in the US market are expected to reach about 2,000 units per year once ramp up is complete. They also made strides in aerospace, meaning drones, having successfully completed a number of demonstrations for potential last mile delivery customers, industry partners, and government agencies and officials. They executed on stables and stalls package delivery routes for FedEx. If you guys listened to the last earnings call, they talked about this stables and stalls initiative where they're actually gonna slowly but surely get more and more of their electric vehicles on these FedEx routes. The company expects to complete the transition to electrify the Lebanon fleet by the end of Q2 of 2023. They started out with one Workhorse vehicle along with some gas-powered vehicles, and they're slowly transitioning to prove themselves and show that Workhorse can be a successful last mile delivery vehicle. They also completed facility improvements at the company's drone engineering, technical design, and production facility in Mason, Ohio, and is on track to install an end-of-line dynamometer and paint line in Union City ahead of the W56 production in Q3 of 2023. And looking at a couple of their vehicles in a little more detail, the W4CC/W750, after receiving the green power chassis units at the end of December of 2022, Workhorse worked to modify and upgrade these base units to fully meet both internal and commercial industry quality standards. The process took longer than expected to work through a few component delivery issues, specifically light bezels, cab heaters, back panel covers, and liners. As a result, the company delivered 10 trucks during Q1 of 2023. However, Workhorse resolved the issues and is currently delivering an additional 40 trucks from inventory to fulfill a fully executed purchase order. The company remains on track to meet full year 2023 delivery targets for the year. The initial W750 pilot builds are complete, design changes have been made, and suppliers have been sourced. Production and shipment of W750s to customers are expected to begin in Q2 of 2023. The W56 program remains on track for start of production in Q3 of 23. The company successfully unveiled the new step van vehicle at the NTEA Work Truck Show in Indianapolis and had a fully subscribed ride and drive session at the ACT Expo. And the video you guys saw in the beginning was part of that. Both events garnered significant positive feedback from potential customers. Now, as for their next generation of vehicles, the company has plans to develop a next-gen vehicle with an accessible, low floor frame, improved ride and handling, efficient lightweight systems, and advanced technology. Workhorse will focus on prototype design, test, and build in 2023 and 2024, with production planned to begin in 2025. Now, a little more on stables and stalls. Workhorse's stables and stalls provide services and charging infrastructure to support small fleet operators with EV-powered fleets. The company recently renewed its contract to deliver last-mile packages for FedEx Ground in Ohio. Workhorse is continuing to review options to open a second operational location in an incentive-supported state. Now, getting more into the drones here. First off, nearing reception of U.S. government purchase order for a Falcon drone system for the U.S. Air Force for use by the North Spark Defense Laboratory, located at Ground Forks USAF base in North Dakota. They conducted demonstrations of simultaneous package deliveries by multiple drones to prospective last-mile delivery clients and a potential industry partner. They successfully completed demonstrations for the U.S. military. They completed scanning of land in Arkansas and Mississippi to support U.S. Department of Agriculture, or USDA's second grant to support underserved farmers and ranchers. And this is one thing about the drones that people aren't thinking about. There's way more use cases than simply delivering a package out of a Workhorse truck. They're also actively exploring new opportunities for collaboration with federal and state government agencies. Now, looking into some of their first quarter results. Sales for the first quarter of 2023 increased to 1.7 million compared to 14.3 thousand in the same period last year. The increase in net sales was due to sales volume of the W4CC. The cost of these sales increased to 5.3 million from 3.9, and we'll see this continually, is that their costs for things like R&D, for SG&A, for just any of those types of things, as they continue to scale up, these expenses will continue to mount. And in reality, it may take a few quarters until this finally sees some positive momentum, even though this company has been making strides in just turning the company around from its former self. As many of you know, we got a whole new set of execs. They've been working on all of the Workhorse facilities, whether it's drones or vehicles. They completely tore down all the old Workhorse vehicles, discontinued the C1000s. They have totally new vehicles now. This is a different Workhorse than it previously was. And despite the fact that this company is showing clear signs that they're making progress, they're getting vehicles out there, they're ramping up production, they're making progress with drones, despite all of that, Wall Street is going to see this as still a money-burning company. And in this high-rate environment, this isn't going to help Workhorse. But you'll see that their R&D increased, their SG&A increased, and their net loss did increase year over year from 22 million to about 25 million. They currently have 79 million in cash. You'll see that as of the last update, they're under 100 million now in cash. And let's read this last thing about guidance before we look at the chart and I kind of give you a little more context. The Workhorse team is focused on execution and financial discipline, said their CFO. We expect to ramp up production and delivery through the rest of the year, which will generate significant revenue growth in 2023. At the same time, we're managing our cash burn well and enhancing our systems internally to make us even more of an efficient organization. And let's face it, over the next couple of quarters, over the foreseeable future, Workhorse is still going to burn cash. They're going to likely have to dilute or acquire debt at a high interest rate. And these small caps are definitely being avoided by Wall Street right now. I mean, just look at this chart. Yes, up here it's very, very overblown because of the USPS decision, because of all that stimulus being printed, all the money printing, people having nothing to do besides trade on speculative investments. And we were definitely in a different type of economy. We're definitely in a different type of market. Now, Workhorse is currently trading at where it was back in 2018, 2019. And despite this company being definitely in better footing than it was previously back in 2018, 2019, Wall Street still wants nothing to do with this. They're going to continue burning cash moving forwards while they continue to scale up, while they continue to produce more vehicles and sell more vehicles. And these small caps are definitely being avoided by Wall Street, as we have seen some extremely aggressive rate hikes by the Fed. One thing I think, as we potentially see the Fed finally pause, a few months go by, maybe by the end of this year, we're seeing rate cuts. That can start opening up the type of environment that lets Workhorse run. Because if they do need to acquire debt, eventually these rates are going to be lower soon. But we still have quite a long ways to go until we're down to, a 3%, 2% even interest rate. And this pessimism on interest rates can definitely be reflected in the stock price. We're in a clear downtrend. We're on a descending 250 MA. We are near 52-week lows. And this company has a lot more to prove. We need to see more upcoming quarters where things look better and better, where they tighten up these expenses, where they start growing revenue. We are at the early innings of this company's turnaround, in my opinion. And despite a very bearish chart, despite, the fact that they're burning cash, and in this environment, this is definitely not the place to be. I do think over the long term, this company is definitely worth keeping an eye on, and I will keep my position in Workhorse. I think when looking at this company compared to where they were, just looking at production standpoint, just looking at what they have to offer in the future, this company looks a lot better than they looked a couple years ago, despite stock price being the same place it was a couple years ago. But like I said, the current environment with the Fed, of course the technical is looking bearish, of course the fact that they're burning cash while they slowly ramp up revenue, these are all definitely things that can negatively affect Workhorse over the next couple of quarters. Until they prove themselves that they can tighten up that cash burn, they can eventually ramp up revenue, and once they show that there is some profitability in sight. In my opinion, we won't see profitability until probably late 2024, maybe even 2025. But profitability will come. In my opinion, we just have to get through the pain. And I don't blame many of you if you want to avoid a stock like this, as it is still very speculative. But just looking over this earnings call, looking over the last earnings call, you can see that they are making some clear progress. They are ramping up production. They do have a roadmap coming up with more vehicles to offer. And of course, there's progress being made on drones. What we need to continue to see is revenue ramp up, expenses tighten up, and also, of course, the macro environment needs to improve. But let me know what you guys think about Workhorse. How do you feel about their earnings? Are you happy or disappointed? And let me know if you listened to the call and what you got out of it. I definitely have to listen to that later today. Thanks as always for watching, guys, and I'll catch you next time.